All right, guys, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, July 10th. Okay, so you can see futures have moved a little bit lower here after hours. I guess there was a headline out about $200 billion in tariffs and naming items, the tweet out about trade tariffs. So, that's the environment that we're living in right now. So, which kind of dovetails right into what I want to talk about. And this video is a little bit later than usual. I had to attend, I had a meeting, so it's a little bit later than usual. But, basically looking at the S&P chart, sometimes I will say on these videos that I don't think the S&P chart is everything. It's good to look at some other things. But I think right now it makes a lot of sense to kind of look at this, right? We're basically right into the face of, I think what I said yesterday was, where history has repeated itself before in terms of we've kind of run out of steam. I do like the MACD crossover here, but now it's a case of managing your portfolio correctly, especially if you're trading options. And this is something that we went over today, pre-market today, as well as we went over midday. If you're a member, you heard me talk about it, unless you could not attend those sessions today. But you have to be in a little bit of defense mode, right? We've had a really nice rally the last 3 days. So at this point, you have to be looking to either reposition a little bit, take some money off the table. So there's a couple games that I play in my head, right? Because sometimes when you come in for the day and you see a lot of option activity, you end up, and you're not thinking about it, and you end up you end up adding more risk than you really intend to. So a couple of things that I always do in the morning, and I gave a webinar on this, or I gave a nice strategy video about this last week. Every day, and like I said, we went over this pre-market, come into the day and realize, what do I want to do today? Do I want to be adding new trades? Do I want to be adding risk? Is this a great time to add overall risk to your portfolio? Or is this a time that you really want to be moving out of some trades and taking profits? So for me today, that's basically what it was, and I didn't do any trading really this morning. I usually look for a day trade, especially for members, which I will always continue to do. But I said, hey, I really don't like much, in the terms. I think things, Netflix, Amazon have really made a nice move. So we did kind of fall apart a little bit, midday, and then we rallied back. So if you're a day trader, which I do a little bit. I probably day trade about 20-25% of the time and swing trade, the 80-75%. But I just kind of sit on my hands and wait until, the volatility. When the volatility is around 12 too, how much lower is it really going to go, right? It's kind of mission accomplished. We got what we were looking for in terms of swing trades. Now it's the time to be taking either, and I don't mean to sound so negative about taking trades off. You could reposition them. If you got into a call at say $3 and it's marking at 450, take it off and put on a new call position for maybe half the size for $1.50, right? Lock it up. We see that a lot going on in the tape as well today. So that's pretty much my strategy, because I think you look at this, right? And you look at some of the trades that hit today, there was a lot of put buying in the indices. So I think kind of everybody's thinking the same thing. There's still, nothing's been resolved with the tariff situation. We got another tweet, right after the close today. So, if you've strung together 3 or 4 days of gains, or even 2 or 3 days of gains, unless something has been really resolved globally about the trade tariffs, that you're going to see a chance for volatility to spike up again. So it's, the constant rinse and repeat of what we're doing here. And you have to have that, to me, anyway, for me, I have to have that strategy in the beginning of the day. If I don't think about that and what I'm doing, then odds are, because what I do all day long is read the tape. And sometimes, just about every day, we'll see a good option activity in at least 1 or 2 names. It's just how it is when you read the tape. You're going to find something that you like. So there's none of this, like, I know I see some people talk about, when the market goes down, they're like, oh, there was really no good option activity. Bullshit. There's good activity every day. It's just based on you what you want to take. Some days it's better than some days it's true. There's better than others. There could be some really good repeat activity. There could be a big block of things, but for 90%, maybe not 90%, 80% of the time, there's always something good. There's always something that's on the tape that catches my eye that's pretty good. So, the part about, when the market's up, oh yeah, it was great option activity. No, it has more to do with, strategy and how you're positioning yourself. There will always be good trades. So that being said, I can go into some of these trades. The one other thing that I'll talk about, is a little bit of tech. My idea as well, considering what we've seen out of the tape the last couple of days, where it does look like a little bit of rotation into some underperforming or under-owned areas, like the industrials and like healthcare, maybe a little bit of the banks, which kind of got run over again today. But I think more industrials and healthcare, I think, are really shaping up versus the banks. But I think we're going to see, and we see this in tech from time to time. Even though I think tech looks pretty good, I think especially the semis had a real nice day today. They finished in value. So there are spots and corners of tech that are still very strong. I just want to lower my weight because I was probably a little bit too overweight tech. So those are things that you want to think about too in your portfolio. So for me, I've got some trades on. I'm running Netflix. I've got a trade to run into earnings, which is doing very well. I got the same thing going on in Amazon, and that's good. I don't really need to be adding a lot more, trades on in this space right now, and both of those trades are doing very well. One word about small caps. Yeah, they were a little bit weak today. They're going to be weak every once in a while, just because they have a down day, which this does look like a bearish engulfing candle. So we'll see how this works its way out. We had this a couple weeks ago too, where it moved down, and we're right back to the, to the 52-week high. But one day of weakness in small caps, it's bound to happen. So we'll see if they continue to be weak, but I still think that this is a very good group to be in, even though you have a bearish engulfing candle. So maybe give it a couple days to let this play itself out. For now, we're still above value. And we do have some support lower in the small caps, 167.04. If you also go to the 5-minute, I talked about on Twitter today, there was a VPOC taken out. Sometimes we go lower past the VPOC, but we ended up going higher. So notice that you've got some down here too. So if you do get a sell-off in small caps, it could get a little bit dicey. But first things first, watch that level here in small caps, which is 167.04. All right, so today's option activity. I would say it was kind of the tale of two different markets in terms of energy. We started to see some energy call buying, names like BP, probably one of my favorite trades of the day, if in energy. But then we saw a reversal and we saw some profit taking. We saw some profit taking in names like Devon. We saw some profit taking in a couple other names. So, a couple, and I'm long. I didn't add, even though, the first thing that we saw today was the option call buying in some of those energy names. I didn't chase any one of them because I'm already long. I'm already positioned. And Marathon, unfortunately, if you look at a couple of names that I'm long, which I don't mind sharing, but they had kind of, and I was laughing about this midday. Luckily, I took a target, but it looks like it wants to break out. But you have, every once in a while, when a name starts to break out, it does one of these like horrible candles. So this is not that bad as it looked midday, but midday it was even looking worse. If it probably my stop will be for Marathon, considering I'm long January calls, and I like I said, I did take a target right on the highs today. So it's again important to have targets out in your option plays. But if it drops below 21.51, I will probably be out of that trade. RRC is another one that has been looking pretty good. And then, slammed with a big bearish engulfing candle. 1682 will probably be my, even though it's still above the 200-day moving average. If it's going to chop around, I probably don't want to be in it. I'm in this for a breakout, not for chop. But in any event, I like to be positioned ahead of time before there's call buying. I think so many people are fixated on they need to see option activity to get into a trade. I'm going to call bullshit on that as well. Sorry, but you should be looking at setups, and this is what we do at Tribeca Trade Group. We look at setups so that we're in names, and then there's call buying. Isn't that a much better place to be in? I don't want to be chasing names that have call activity in them, unless it's really something good on the tape in terms of option activity. But for the most part, I want to be in names before there's option activity, just like today's energy buying. All right, so that was one of the major themes today. A little bit of call buying and a bunch of other areas. I would say healthcare still continues to be. We're still seeing paper flow into some of the healthcare names. Merck saw 40,000 August 65 calls. J&J saw some weekly calls. I did play J&J for a day trade. Made a little bit of money on it. Nothing crazy, but. So we're still seeing some flow in that. I'll tell you, I'm long XLV, the healthcare ETF. I've taken 2 targets in this one, and now I'm running with the profits in this one. And XLV has all those names that I mentioned into it. I also like the Celgene chart, which I've gone over a couple times, so I'm not going to go over that again. What else do we see today? A couple just different things. Some Under Armour calls. Really interesting because there was a lot of put activity, which I want to make sure I'm stressing. So it does feel like people are a little bit squeamish of the tape. After a run up, we saw a lot of put activity today, aggressive put buying in SPY. Again, most likely insurance versus somebody's long portfolio. Some Qs as well as IWM, which I don't have in here. Also, a lot of XRT puts. I don't really know. I was looking at a chart of XRT. I don't see anything, but maybe somebody is thinking that something it's due to hedge. I mean, look at all the puts. This one was 920,000 of opening. This is an opening trade, right? August 49 puts. Look at also the 48 puts. Also looked bought for 10,000 contracts. I don't think this was a spread. 920,000, 870,000. Then look at what they did with this one too. And then also the more of the August, 13,000 of those August 48 puts. So it appears someone is looking for retail names to go down. Remember, XRT is an equally weighted ETF, so everything, you got small names in there, large. But that to me is interesting when somebody buys like crazy. Some of these, and again, some of these were spreads. This one was a 1x2. Look at the size of this thing, 1x2 put spread. So again, when you do a 1x2 put spread, it looks like they bought the 48s 50,000 times and sold 100,000. So they're basically putting this up for 0 cost, and maybe that's a little bit of protection for them in the XRT. So keep in mind, XRT retail has had a really nice run. Maybe somebody's looking for this to go a little bit lower. And again, if you look at the strikes, 48, 47. So maybe just taking another leg, a little bit of a leg lower. Not capitulation in retail, but somebody is either hedging themselves or speculating that retail names go down a little bit lower here. So that goes right into Under Armour, which saw some calls on the UA line. I think that looks like an interesting chart. Had a real big run up, had a big false move here. I was looking at this too. I had sent out a couple of charts saying Under Armour might be interesting. And you had this ugly looking reversal bar, but it's just been sitting here, and it's sitting on the 20-day moving average on in value on the bottom of value. So looks like a kind of abstract bull flag right now. But I would use support of 2092. So somebody who's buying that. Also Blue Apron, which for the life of me, I don't know why somebody buys calls in Blue Apron when it's a $3 stock. I don't get it. But in any event, there was a lot of Blue Apron calls that went up today. Just doesn't make a lot of sense. How cheap are people? The 4 straight calls, October and August. BLL, this was a pretty interesting trade that went up today in BLL. It appears they got out of an August position, like about a $2 million position, and rolled the whole thing over. They rolled out and up to the January calls. So again, you have to kind of look at these in context. This is not a new trade, at least I don't think it is. I think they unwound these 7,000 contracts in August and went into the January. So I still think they're bullish. They're definitely bullish, but it's not a new trade. They're just repositioning. And you could see the premium is exactly the same. 2.6 or 2.06 versus 2.03. And I think that's kind of it. There was a couple, there was a little bit of Nvidia calls, which I think also looks pretty good. And this is nice because it's already reported earnings. A lot of the names, a lot of the bigger names are going to be reporting in the next couple weeks. So that's the last thing I'll say. While I think this chart looks pretty good, you got your in value, 1 bar in value for Nvidia. But that's the other thing is, unfortunately, we've got earnings the next couple weeks, and it gets very noisy. I will say this, and you'll probably hear me say it all through the week in terms of these videos. I position a lot lighter in earnings season. I do take some trades, some catalyst trades where I'm looking for a run into earnings, and I will play earnings trades. But overall, for swing trading, my size, I'm going to be unwinding some things because it's just, I have it literally written down in my notebook. Do not for me that I do not trade, do not do a lot of swing trading for earnings. It just gets a lot harder to read option flow. Also, all those company buyback machines are in closed periods. So, they're not buying out in the open market anymore. They're in closed periods. They're in quiet periods. So it doesn't provide that underlying floor to the market. So I think it's a place to really position a little bit less. All right. Thanks for watching tonight's video, and see you tomorrow.